Hey, good evening, everyone. This is Kirk here again with the Bulls and Bears. It is Friday afternoon, the 12th of June. Welcome to this week's edition of the absolute most boring market to ever exist. This is just far-fetched from anything that any of us have ever been used to. This has honestly got to be one of the most boring weeks that I've ever traded in the past 10 years. Completely and utterly straight sideways for June. There's no big movements. We haven't seen any sustained close. Just chop, 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 chop. Clearly, as you can see by my drawings here, we just seem to be bouncing right back and forth between these little areas. Yeah, a case could be made that we pretty much hit the top side of this right here. Is still a little bit of gap to be filled. But the point still remains that this market is just moving dead sideways. And really what this means is that on both sides here, there's either an equal amount of buyers and sellers, or there's just nobody in the market in general. I know that, and I pointed out on last night's video, that there are a lot of put options being bought by institutions right now. Usually that is a pretty good indicator that they are hedging their portfolios, or at least whatever they've gained thus far in the rally, for the downside. They're buying up these put options to hedge market direction here in anticipation of a downward move, and then hoping to make a little bit of money on those put positions and hedge their current portfolios or reduce the volatility of those. So that, in conjunction with a lot of other things, leads me to believe that next week, hopefully, we will try and break this crucial and very hard to get through 925 to 930 zone here on the S&P. But let's take a look at a couple other things. Okay, this is an intraday look here over the past 20 days of UN. This is Unilever. This is actually one of our shorts, so the rare chance that you non-members get an opportunity to take a look at one of our shorts. And I point this out just because pretty much you miss a pretty good break here that we already had. You can see that clearly this was the uptrend line for the better part of 2 months here, and now we have clearly had a huge break here of this trend, and Unilever broke today down just about 2.25% here on the day. But again, really this is just determining that this uptrend is no longer in place, and now we should be headed back down. Our target for this is obviously definitely below where this is even on this chart, but we won't get into that on this particular video. Okay, this is actually a look at TLT, and these are the iShares Barclays. This is actually following the treasuries here, and it's a really interesting chart because the way that the bond market has reacted, rates have just been going up, 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 and that is signified here by treasuries just sinking here. But what's really interesting is that there has been a lot of people coming back in and buying up this little dip here in the treasuries. Now, whether this signals a top in the market, as we know these things work in inverse to each other, that is just still yet to come. But this little spike in volume here, a lot more people coming in here and buying this up, and you can see the treasuries had back-to-back gains here over the last couple of days. So maybe this is an early indicator, maybe not. This might just be a good time if you look at this as just a regular chart here and don't try to relate it to the bond market in any way, to buy up some TLT here at pretty good prices and play the next rebound up to, say, 97.50 or even 100. Okay, now we're going to get into GLD. These are the Spider Gold shares, and I've been very, very vocal over the last couple of weeks about saying that I thought that gold was at a good basing pattern here. I thought it made a nice, strong base ready for the next move, and I had also said that really, if this thing started getting going, it wouldn't get past 97.50, and really that's exactly what happened here. You see it kind of stalled here in the middle of this and didn't run up to the next set of Fibonacci fans and Fibonacci level retracements, and that's really because that type of move is just too far stretched for gold right now, and the way that it's been acting in the past with this type of huge move here, you really can't expect it to do in one shot get up to 100. So it's clearly retraced back down. If it does continue down, which I think it will for a little bit, I think it'll hit and kind of find support here right around 90. You can see that's where the next Fibonacci fan is, and that's been a pretty good indicator in the past of support here for gold. So my target for gold is somewhere around 90 for this ETF. From there, it's going to be really crucial for it to start bouncing again. If it doesn't and it starts crashing down here, then we could see prices back down here in the mid to upper 70s. Okay, the last thing I wanted to look at tonight is another look at one of our shorts, and I've actually moved the chart so you can't see what ticker this is. But this one was actually down just about 2.5% today. Amazing looking short here, and you can see that even though it had a very nice, very huge basing pattern here, that it's way overextended itself here. Even on a weekly scale, this is just way overextended. Slowly, you can see it's starting to make a nice topping pattern here. The main thing I want to point out with this particular chart is the fact that you can see here we've now kind of bucked the trend this week with higher highs. Now we have a lower high next to this, what could be the interim top here in this particular stock's move. So this whole time that it was rising, it made higher highs and higher highs and higher highs. Now we've kind of bucked the trend on the weekly scale, which is starting to signal the downward spiral of this. The other thing I want to point out on this is the volume. You can see here that as it was shooting up, volume was very high. Now volume is at its pretty much lowest level in the past 3 or 4 months. So not a lot of people supporting it at such a high level. Ideally, they're going to wait for a pullback to get back in, and we're going to profit on the pullback in this. Okay, that really ends the video for tonight. As always, if you have any questions or comments, please email me, and the members only video will be going out sometime tomorrow night or early Sunday, as well as the option writers report will be going out Sunday as usual. That was a great week for us and the option writers. The market moving sideways is exactly what you wanted. We made a lot of money in option writers this week. So that's it for tonight, and happy trading.